Good morning, good afternoon, good evening, depending from which part of the world you are joining. I am Faisal Abu Zaki, the Deputy CEO of Al-Iqtisad Wal Amal. I'm delighted to join this panel as a moderator. This panel of highly distinguished speakers. First, I would like to introduce our panelists before we kickstart the discussion. We have Mr. Hubertus Vaz, the Managing Director of Frankfurt Main Finance, Mr. Khalid Al-Hussan, Chief Executive Officer of Tadawul, the Saudi Stock Exchange. We have Mr. Ahmad Shamsuddin, Managing Director and Global Head of Research at TFG Hermes, and Dr. Ali Audi, the Head of Economic Research at the Union of Arab Banks. After we conclude the discussion, of course, we will try to take as many questions as we can from participants. We are going today to delve deeper into the repercussions left by the COVID-19 on the region economies and capital markets, and try to identify lessons learned from this severe and unprecedented crisis. And how can we develop policies, mechanisms, tools to help better withstand the shocks and to add more resilience to our markets. A return to some kind of normalcy in the region will hinge, like everybody else in the world, on the extent of success made in the containment measures of the pandemic and vaccination drive, as well as in maintaining the fiscal and monetary support policies in place until the recovery takes a firm hold. In this regional outlook, the IMF made a forecast of growth of over 3% in 21 and over 4% in 22, compared to a average contraction of 3.2% in, of 5% in 20. So we are now, I would like to start with Mr. Ahmad Shamsuddin. If you can give us an overview of the macro outlook and its implications for the region capital markets, please.
Thank you very much, Faisal, and I'm very honored to be part of this panel with the distinguished speakers and with you. Thank you very much, AFE, for the invitation. I think this is a very important topic. It was a very challenging year last year, obviously, for the pandemic-related restrictions all over the place. But as far as the Arab markets are concerned, I think our markets in general delivered very strong performance, or the key markets in the Arab world delivered very strong performance despite all these challenges. So if you look at the macro challenges, definitely there were a lot of, kind of restricted activities that weighed on growth. We're talking about between 5 to 6% retreat in economic activity. Fiscal deficits have widened. This actually triggered even more fiscal reform measures that impacted domestic consumption, and domestic consumption in some markets are actually huge. We're talking like a market in Egypt. This is like 75% of the GDP. In Saudi, domestic consumption is actually one of the main contributors of the non-oil economy. So in general, we've seen a lot of fiscal stress We've seen a lot of slump in domestic consumption, and we also saw the impact of what we would call a labor market shock in Saudi and in the UAE. This is definitely are factors that would have led to a very negative performance in the equity market. But if you look at the equity market's response to that, it was actually very positive. And the reason is the diversified investor base and the regulators and the kind of the reforms that have actually been put in place to attract foreign investors. So in terms of the foreign liquidity, whether by upgrades like what we've seen in Saudi Arabia and in Kuwait, or through the increase in FOLs, the foreign ownership limits, we've seen billions of dollars poured into the local markets, and this helped actually diversify the investors base. And it actually, if you look at the foreign ownership in these markets, we're talking between 10 to 15%, with the exception of Dubai. For obvious reasons, it's more than 30%. But this is definitely one of the main reasons why our markets have actually performed very well. So everybody's looking to 2021 recovery in earnings. And I think while, in the classic valuation models, this might be in the price today, but the boost in liquidity and the more institutionalization of the capital markets is actually helping most of the markets in this region very much. So I think that going forward from here, macro is bottoming out. Oil prices are actually higher than last year. The oil market fundamental in general is better. This should actually create more domestic liquidity because the foreign liquidity has peaked for last year, and I think the room for increasing foreign liquidity in the market is a bit limited unless companies and regulators increase foreign ownership limits. But domestic liquidity should actually pick up from here, and I'm positive that the role of local institutions and quasi-governmental institutions will continue to support the markets, and fundamentals in general will start to improve. We're expecting our in-house view for the GCC and for Egypt and for all the markets that we cover. We're expecting much less fiscal deficits as a percentage to GDP, and this should actually boost liquidity, and domestic liquidity will be the key factor for 2021. I hope this answered your question, Faisal.
Sorry, thank you, Mr. Khalid. Tadawul is the top in 10 markets in market capitalization in the world, and over its share, it's over 75% of market cap of the MENA region stock exchanges. First, how Tadawul is coping with COVID-19, and how your strategy could evolve from here on.
Thank you, Faisal. Good morning, good evening, ladies and gentlemen. Thank you for this opportunity. Of course, the COVID-19 is, as we all got impacted by it. It's a global event that have impacted all type of sectors around the world, all type of economies, whether they are developed, emerging, or smaller economies as well. So we are part of this global setup. We have no immunity to that impact. But what we have seen as stock exchange is, of course, there are companies in our market that have gained opportunities during this recession, while others did not, and that was reflected in their financial results. The most important factor here is how stock exchanges in general reacted to that. I think many stock exchanges around the world have shown a strength and resilience and being there during this recession. And I think the Dow was part of that group. We wanted to make sure that we are available as an exchange to our investors, issuers, and market participants through resilience operations. We wanted also to make sure that our rules and regulations are flexible enough to adhere to support our issuers and investors, as well as the most important factor of stock exchanges being available as a venue to help the companies, whether through financing, whether through capital restructuring, and all of these factors needed by our issuers. So, as my colleague Ahmed mentioned, domestic liquidity was a driver, in my opinion, in our market. Liquidity, despite the shock that all stock exchanges got in Q2 of 2020, when the spread of COVID-19 started, we have post that seen a good liquidity pickup in the market. Actually, we haven't seen this liquidity in the last 8-9 years, driven by mainly local, as well as toward the Q4. We have seen also the international investors are being back to the region, specifically to Saudi Arabia. We have seen an increase by 18% of foreign investors. And when I mention foreign investors here, I'm looking at active investors. And this is, if I look at active versus passive investors, I'm looking at a positive sign of stock exchanges being an attractive venue back to institutional investors. So it has been a challenging year, but we continue our diversification. We have successfully launched our first index future market last year, and we sort of try to introduce a diversification setup to also enable our investors to have different type of tools, different type of securities to hedge their risks, to hedge their positions, and we continue to do that. IPO pipelines, to conclude with that, was also a positive reactions to Saudi issuers, where we onboarded 9 new listed companies in our equity market, which is, if you look at it from recession or uncertainty conditions, usually in economy, usually issuers tend to shy away from markets. We have seen the opposite, which gives us great confidence of our platform. And just to add to that, and as I mentioned by His Excellency Chairman of CMA yesterday during the opening, we are noticing unprecedented IPO pipeline in the Saudi market, in the Saudi capital market, that we expect this year. So, to conclude, it is an unfortunate event globally, but I think many stock exchanges have reacted well to the pandemic and delivered what is required by their clients.
Thank you, Khalid, for this enlightening remarks. Of course, I mean, Saudi Arabia is witnessing an unprecedented or historic transformation, and I think opportunities are vast across the board. Mr. Vath, being at one of the world one of the global, major global financial hubs. How do you assess the EU response to the economic and social disruption caused by COVID-19? And what are the key lessons learned from that experience in Europe?
Thank you very much, distinguished chairman and co-panelists, ladies and gentlemen. It's a great honor to be with here, and to give you a little bit of the background for those lessons. I would like to share the screen with you, and for that purpose, give me a brief second, and you should see now the screen. What's the situation at the moment? Europe didn't have a very good crisis, to be honest. We have seen significantly death toll. Germany over 900 per million population, even topped by the UK, Italy, and France, with European average level of more than 1,180. So this wasn't very good, but on the right-hand side, what you can see is vaccinations are going up, and that's going to, it is a key topic. That's an issue played at the markets. That's gonna impact the markets. We've seen that with about a level of over 30% of vaccination, that is when the full economic life returns. So to vaccine is the key thing here. What you can see, the UK is ahead of it. They've done very well in managing it. Europe as a whole has more than 10% of people vaccinated at least one, and more than 5% twice, but one vaccination dose is already fairly efficient. The jab produced by Germany's BioNTech together with US pharmaceutical Pfizer was the first breakthrough mRNA technology and seems to be particularly efficient. Moderna is another mRNA jab that has also been approved. So what you can see here is a fairly slow start. It has a lot to do with safety standards, quality, efficacy, also the arrangements that took a lot of emphasis on being fair, being equally treatment, to also take the most vulnerable first. It certainly will, with hindsight, have to be reviewed whether it eventually slowed down the whole process too much to be justified by it. But what we see is a fairly equal distribution throughout the Union at the moment. So Germany, against that background, which is known for fiscal prudency, has made the probably biggest protective shield in its history, 130 billion, our finance minister called a kaboom, and provided a powerful impetus to stabilize the economy. To give you a sense of how that worked, in 2020, the income of people in Germany, despite the economy going down by 5%, lost only 2% in personal income. So it's been fairly stable, and there have been very few social disruptions. So no matter whether you're self-employed, or work with a company, or full-time parent, the package more or less had anything for basically everybody, and this is has been a very important part of the overall response, and it will fuel the economic recovery, because what we see is that a lot of this money has been saved in cash accounts and is ready for consumption as soon as the restrictions are lifted. What is Europe's response? At the second half of last year, Germany chaired the European Council, and it has, first of all, made a big effort to ensure that there is an equal recovery across Europe. An extraordinary 750 billion recovery fund called the Next Generation EU has been established. But the Union also looked beyond. It also established a facility of 36 billion that targets, and particularly regions that have suffered and which have not the means to strive to recover themselves. And the Union also has a budget approved in excess of 1 trillion euro for 21 to 27 to boost growth and support citizens and businesses to recover and make that recovery more sustainable. So that is a key issue that also echoes, by the way, what you've seen in the Arab world, particularly also in Saudi Arabia, where you build eco-cities with zero cars, zero streets, zero carbon emissions, and with all the residents living within a 5-minute walk of essential facilities. Similar concepts are being tried within that framework of the 750 billion package. So overall, the market has, against that background, looked at a massive wall of monetary support, a massive wall of fiscal support, while at the same time being able to really limit the damage to the social infrastructure. And against that background, we believe that the original promise made by our Chancellor that by end of September, each and every European citizen will have been given an offer of vaccination can be maintained. By the way, very close to Frankfurt, a new production facility of BioNTech Pfizer is shooting up. The production is getting ahead. It is increasing rapidly. So we're optimistic and confident that we will have by autumn a massive, very sustainable recovery in our economies that will fuel and boost the markets in Europe and beyond. Thank you, Mr. Chairman.
Thank you, Hubertus. I think we had an overview on what the EU did and doing to combat the COVID-19 repercussions. The banks, or basically Arab banks, played a key role in helping their clients cope with the severe impact of the pandemic, while benefit from the various fiscal and monetary stimulus offered by governments around the region. The crisis, of course, has triggered sizable increase in NPLs for banks. How banks are expected to emerge from COVID-19 debacle and regain their trajectory growth, Dr. Ali?
Good morning, Mr. Chairman. Good morning, everybody. First of all, of course, it's been a tough year for everybody, including banks, including financial markets, including all business sectors. Please allow me to give some numbers to compare the development of the macroeconomy in the Arab region versus the banking developments during 2020. The latest figures released by the World Bank early this year estimated that the Arab region economy declined by about 6% or 6.1%. Also versus about 4.3% in a global decline. So it seems that the Arab region was hit more than the rest, the other regions. Also, the Arab region, according to the World Bank, the Arab region lost or about 70% or 2/3 of the Arab countries lost more than 10 years of GDP accumulation, or more than 10 years of GDP per capita accumulation. Also, much more than the other regions. So the shock coming from the corona pandemic was coupled with a very low oil prices. So this resulted, as I said previously, in a decline of 6% in the Arab GDP. On the other hand, the latest figures show that the Arab banking sector, the entire banking sector, grew by about 6%. And of course, the growth rates differ from country to a country, from a banking system to a banking system. Some banking systems, some Arab banking sectors recorded even much more than 6%. But on average, the growth rate of the Arab banking sector was about 6% in 2020. The consolidated assets of the Arab banking sector reached, according to our estimations, reached about $4 trillion, which represents about 165% of the Arab GDP. So the hit was less for the Arab banks, of course, because they are not the Arab banks are not isolated from their entire economy, from the markets where they work in. But the point is that because they are used to working in a tough environment, in countries full of challenges, economic challenges, geopolitical challenges, financial challenges, etc. So they were able actually to absorb the shock coming from the pandemic, from Corona pandemic, and they adopted the policies, the strategies that they were preparing. They were ready, so they were ready for such shock. And that's why they were able to continue recording growth despite all the difficulties their customers were facing. And also, please don't forget that a considerable number of the Arab banks, the big Arab banks, rely on the government funds or government liquidity in deposits. However, again, they were also able to overcome the liquidity shortage or the decline in liquidity, of course, with considerable support from the central banks and from the governments. Now, so the point I wanted to say that the growth continued despite all the challenges. Now, coming to the profitability and non-performing loans and the credit risk. Of course, there's an increase in NPLs, in credit risk. However, it's still within acceptable limits. The profitability, there is a challenge regarding profitability again. However, the banks are still recording acceptable levels of profits. I think recently, for example, the Saudi banks released their consolidated profits. There's about a 20% or so decline in profits, which is actually acceptable, taking into consideration all the challenges, all the difficulties faced by their customers. I'd like also to add one point that despite all the pressure, banks all over the region, from Morocco to Bahrain, extended the maturity of loans for their customers, whether individuals or companies. They lowered interest rate, they even extended lending. And this is a very important point because we all know that during tough economic conditions, banks tend actually to decrease their lending. Okay, and lending is known to be counter-cyclical. However, what we've noticed over the past year, in 2020, that Arab banks actually extended their lending, whether to individuals or to the business sectors. And also the numbers we have, our estimations show that in 2020, the Arab banks extended their lending by about 6.5% during 2020. And the total loans, the aggregate loans at the end of 2020 reached about $2.5 trillion, which represents about 105% of the Arab GDP. So again, this is another, let's say, figure that shows that even during the tough economic conditions during 2020, which was an exceptional year, Arab banks continued financing their economies, whether we're talking about the individuals or the business sectors. Of course, taking into consideration the decline in liquidity, the extension of loans, lowering interest rate, lowering fees, banking fees, etc. So I think that 2020 was tough for everybody, for banks also. However, this did not prevent banks from, let's say, continuing their role in financing economies, in injecting more funds to the economies, particularly in such tough conditions. I hope, Mr. Chairman, I have shed light, or I have answered the question briefly and using some numbers.
Thank you, Dr. Ali. That was a comprehensive overview of the banking activities in 2020 in the region. I think just if we, from what Ahmed and Khalid mentioned, foreign investment is a key to probably to recovery and to growth in the coming years. In Saudi Arabia, I think Vision 2030 put a lot of emphasis on mobilizing foreign investment into Saudi Arabia. And we have seen the announcement recently of the privatization law and many mega projects. Okay, how do you see the prospect of foreign investment, whether it's portfolio or FDI into Saudi Arabia, and what is Tadawul role in this respect?
Sorry, is the question addressed to me?
The question to Mr. Khalid.
Okay, sorry.
Sure. As you said, Faisal, Saudi Arabia has landed into the Vision 2030, which one of the key focus of 2030 is to open up the Saudi economy and to open up the country and integrate ourselves with the rest of the world. Of course, it will add new elements or channels for growing our economy, transforming our country, and the setup overall. If I look at it from the capital market perspective, of course, capital markets or stock exchanges in particular necessarily need to compete with each other. And this is for good reasons, in my opinion. Saudi Arabia, or Tadawul in particular, benefited a lot from opening this channel. We have the inclusion have impacted positively the cash inflow in the Saudi market by billions of dollars. It continued to be growing year over year. We have seen on the last 24 months net position positive between buy and sell by international institutions, and that for both active and passive investors. It positions the exchange to compete on the right matters, in my opinion. It stabilizes our liquidity, it stabilizes our offering as well. You need set of or type of investors to diversify your offering process. I would pick an example of the derivatives that we just launched. This is a very, as you know, this is a very sophisticated product, and it is an institutional nature product. So in order for us to develop the Saudi capital market and compete properly regionally and internationally, we need these set of products. And without the demand side, from the other side, we will not be able to succeed on contributing to open up the Saudi economy to international investors. So since 2015, 2016, we have landed in a decision to open up the market with all of its factors. And another factor as well, it gives you a more stable impact of global events. If we look at COVID-19, for example, if we are an isolated exchange, we would be, in my opinion, impacted more harmfully by COVID-19 compared if we are an integrated platform or integrated economy. In addition to that, international investors will bring to this region in particular good practices, if I may call it. Good practices around governance, good practices around investor relation, around, we have experts on research here, coverage for investors, ESGs, which is an important priority today. So these practices will be brought to the region. And this is exactly part of the key priorities for developments of the Saudi capital market. And I would say, as the chair of the Arab Federation of Exchanges this year, this is an important pillar that we would be focusing on in the AFE, on how do we partner and how do we make sure that international good practices are implemented in our region, are implemented properly, because this is the way forward, in my opinion, to compete and compete strongly as a region.
Thank you, Khalid. Ahmed, if you can just briefly give us what are, if going on from now in 21, what will be the drivers of the equity as well as other capital markets in the region,
Yes, sure. So basically, I think the drivers of the equity market will continue to be the domestic liquidity. Domestic liquidity will actually be a key factor in the performance of the Arab or the key Arab markets in general. I think in terms of the fundamentals, market varies a lot. So we're not talking about one market for all. We're talking about two different fundamentals. We're talking about oil exporters. We're talking about on the other hand, demand-driven economies. So external demand and the pent-up demand created by the pandemic will actually be reflected very differently across all the economies. But in general, if you look at the Saudi market, if you look at the UAE, whether Dubai or ADG, if you look at the Kuwait, which got upgraded very recently, the fundamentals are very different. And the fiscal and monetary piece is also very different. In general, domestic liquidity will be a main factor, with the exception of Egypt, maybe, where I think that foreign investment will start to look at this market again, because Egypt is the only market that have seen net foreign outflows in the last 3 years. I think the fundamentals are actually started to be very attractive. In Saudi, the market is the most diversified and has it's the deepest market from a fundamental perspective. It's very well represented with petrochemicals, demand, consumers, real estate, banks, all of that. And also the investors base is very well diversified. So I think, and that's why when you talk about Saudi, you talk about a very active IPO market, very active deal making across the board compared to the rest of the markets. the UAE market are lacking the retail support a little bit. So Egypt is lacking the foreign support, but on the other hand, UAE is lacking the retail, the domestic support. Saudi is very well balanced. Kuwait is actually very tricky because we learned from the historical experiences that after the upgrade to emerging markets, market turned to behave differently because the flows actually and the volatility in the market tends to be in the first year after the upgrade tends to be a bit tricky. But in general, for all these markets, we're talking about domestic demand, domestic liquidity. And I think the increase in oil prices, the increasing role of quasi-government institutions and local institutions in general will ensure that domestic liquidity will continue to drive the market positively. I don't want to take more than the allocated time, but I just hope this covered the point, Faisal. Back to you.
Thank you, Ahmed. It's well put. Mr. Hubertus, I think, briefly, if you can, just what are the key lessons, in Europe from the COVID-19, especially on the financial, on the economic and financial market sides, and how can they be relevant to our region?
Well, let me make it 3 key lessons. The number one is make sure your structure, social structure, industrial structure gets not damaged beyond repair. So make sure during such an obviously temporary crisis, take care of the system. That's number one. Number 2 is if you save in good times, then you have in bad times. So fiscal consolidation and making sure that fiscal capacity for firepower in emergency crisis is there needs a prudent fiscal policy beforehand, and then you can really pull it off. And the third lesson is that when you have these sort of disruptions, use the impetus, use it to restructuring going forward, apply new technology, apply the new sustainable standards for the recovery strategy, and do that in a socially cohesive way, though that within a union, nobody is left behind.
Thank you. That was very brief. We still have like 4 minutes left. Dr. Ali, if you can briefly give us, what are the main challenges of the Arab banking industry? Before there were many issues, facing the banks. With the COVID also, more pressure have been added. The banks did well in the pandemic. What are the key challenges, that will, decide the growth track of banks in the coming years?
In fact, let's say the main support during 2020 from the government is the income support, where governments supported directly or indirectly the business sectors and individuals. Now the support will move from direct support, from income support to growth support. So I think that the main challenge will be the success of shifting from income support to growth support, to macroeconomic growth support. So if the macroeconomic growth is not triggered well, so I think that the decline in growth will extend beyond the 2021, not only during this year. So eventually this will affect the banks negatively, because they withstand all the numbers show that they were able to withstand the 2020 and of course the 2021, but with weak growth over 2021 and 2022, I think this will pose some more challenges to banks.
Thank you, Dr. Ali. I think we kept our promise to stick to our allocated time. Thank you all for this rich and thought-stimulating discussion. I think we probably are a bit more optimistic in 21 than we were in 20, and we're more likely to put this crisis behind us and move forward, regain the growth, and implement the growth agenda and the investment agenda that most governments have undertaken in the region. Thank you all for your time and interesting input, and look forward to seeing you again.
Thank you very much.
Thank you.
Thank you very much.
Okay.